How the Stock Market Works by Cassandra Leach, Sidney Duquette, and Brian Brothers. Why do we buy stocks? One reason is to become part owner of a company. If the company is making a profit, you make a profit as well and are included in the company's long-term success. The price of a stock depends on the company, which depends on the environment, including its customers, its industry, the economy, and the political climate. People involved in a trade. There are many involved in the stock market. A shareholder is the name given to the person that owns at least one share in a company. This could be anybody, including yourself. A stockbroker is the person who actually buys and sells the stocks. A runner is broker employee who delivers a market order to the broker's floor trader. A runner will tell the stockbrokers who wants to buy a certain stock in a company. They serve as the middleman. These three people work together to successfully buy and sell stocks. Now let's talk about actual stocks. There are two main types of stocks. Common stocks are the most common form of stock that people own. Shareholders of a common stock get one vote for when the company decides to have an election for the company's board of directors. Stockholders of preferred stocks have more claim to a company's assets and earnings and are paid at regular intervals. Preferred stock owners do not have a vote when a company is electing new directors. There are many different types of markets. For example, NASDAQ is probably one of the most known American stock exchanges. It was the world's first electronic stock exchange in 1971. It is also the biggest stock exchange in the United States. What does it mean to trade stocks? Basically, trading stocks are just transferring money from the seller of a certain amount of shares of a company to a buyer that would like to be part owner of that company. There are two methods of doing this. The first method is virtual exchange, which is a system of computers where trades are made electronically by traders, which is the most common. Another method of trading is a physical exchange, meaning that traders enter oral bids and offerings for a stock. This method isn't used as often as it has been in previous years, but people still choose to use this method today. The stock market is not always a way that people can make money, but rather a place where many people have lost the majority/all of their money. One of the most well-known times when people lost a lot of their money is the Wall Street crash of 1929. This was the most devastating crash throughout all of U.S. history and led to 10 years of the Great Depression. Throughout the years, there have been many other crashes, but no crash can compare to Black Tuesday. As you can see in these two pictures, the way the stock market looks and runs is very different than when it first began. A lot of trading is done electronically, and less people are needed to be on the floor at one time. It is still chaotic and stressful, but with a smaller amount of people. The overall importance of the stock market is for companies to raise money. It allows companies to buy publicly traded stocks, which raises capital for further expansion within the company. As companies expand, job opportunities increase, and more materials are made and sold, earning more profit for these companies. We'd like to thank you for listening to our presentation on how the stock market works, and we appreciate your time.